Planning to own a liquor store? You might want to think twice. Not because you shouldn't do it. It's because there's a real gap between what this looks like from the outside and what it actually costs. And that gap is exactly what this video is for. The pitch is a classic for a reason. Genuinely recession-resistant demand, decent markups, holiday sales spikes you can set a watch to, and a customer base that keeps coming back whether the economy is up or down. Here's the part almost nobody pictures. The exact same liquor store, same size, same inventory, same everything, can cost $100,000 to open in one town and require a license alone worth $400,000 two counties over, before a single bottle gets stocked. So how does one business have two completely different price tags depending on which side of a county line you're standing on? That's what we're figuring out today. One quick note before the numbers start. Every figure in this video is well-researched and checked against multiple sources. But research can still contain honest mistakes, and costs and regulations shift by state, city, and sometimes zip code. Treat these as your benchmark, not a quote for your specific situation. This video is for educational purposes only and is not legal, tax, financial, or business advice. Always do your own research and due diligence before making any business decision. A second note, specific to this episode. Alcohol licensing might be the most state-by-state variable topic on this entire channel. Control states, license states, and quota systems all work completely differently, sometimes even county to county within the same state. Verify your specific state and county's actual system before making any decision based on this video. The first cost, the one that splits into two entirely different businesses depending on where you're standing, open market states and scarce license states, aren't the same buy-in at all. In a straightforward, non-scarce market, total startup costs, licensing, initial inventory, store setup, security, and point of sale typically run $100,000 to $250,000. That's one path. The other path starts with a completely different number, and it has nothing to do with shelving or inventory. Many states cap the number of liquor licenses available, tied to county population or municipal limits. In some markets and metro areas, no new licenses are being issued at all. The only way in is buying an existing one from someone who already holds it. In those markets, license scarcity alone can drive $100,000 to over $1 million of value into the license itself, entirely separate from the store, the inventory, or the building. Real transactions make this concrete. A public company's own SEC filing shows it purchased a 4COP quota license for Broward County, Florida, from an unrelated third party for $446,000. A license currently listed for sale in Pinellas County is asking $525,000 to $600,000. Both are just the license. Neither includes the building, the inventory, or a single shelf. Meanwhile, some states run what's called a control system, where the government itself manages wholesale or even retail alcohol sales directly. In those states, the entire question of how do I open a private liquor store can work completely differently, or not be possible at all for certain categories. Whichever path applies to you, inventory is its own real number on top of the license. In a typical acquisition, inventory alone commonly represents 40 to 60% of the total asking price. The hidden trap, the one where the government fee is almost an afterthought, the real cost isn't what the license costs. It's how long you wait to get it while the rent clock keeps running. Here's a number that surprises almost everyone stepping into this for the first time. In some markets, the actual state license fee itself can be as small as a few $100s. The catch is how long approval takes. Processing timelines swing from as little as 30 days in states with light demand to 12 months or more in contested urban markets where other license holders or neighbors formally object to a new application. Run the real math on that wait. If your rent, utilities, insurance, and any staff you've already hired add up to $15,000 a month, A 90-day approval process costs you $45,000 before you've sold a single bottle. Stretch that to 6 months, and it's $90,000, purely in overhead, purely in waiting. One state's own guidance puts it even more starkly. A license with a filing fee of just $300, paired with a 9-month approval timeline, can cost $27,000 to $225,000 in dead rent alone, before the doors even open. That's the real trap. The sticker price on the license application form is almost never the number that determines whether this works financially. The waiting period is. Local quirks compound this further. Some states expire every single license on the exact same calendar date, regardless of when it was issued, meaning a license approved in March might already be due for renewal weeks later. Others require public hearings, local municipal sign-off, or additional permits, like a separate permit just to allow dancing or a DJ if you're running any kind of on-premise space alongside retail. None of this shows up in a simple "how much does a liquor license cost" search. It only shows up once you're the one waiting on the approval letter. The real engine, the one that makes this different from almost every other retail business on this channel. In a scarce market, the license isn't a cost of doing business. It's an asset you're quietly building equity in. So in the markets where licenses are actually capped, where does the real money end up sitting? In the license itself, appreciating quietly in the background the whole time you're running the store. Take that same Florida quota license. The annual renewal fee to simply keep it active runs around $1,820 in larger counties. What someone would actually pay to acquire that same license from an existing holder is a completely different number, driven entirely by how scarce licenses are in that specific county. In quota markets nationally, that acquisition price commonly runs 10 to 100 times higher than what an open, non-scarce license would cost. Same paperwork, same government form, a completely different value, purely because supply is capped and demand for a spot in that market isn't. That reframes the entire ownership question in a scarce market. You're not just buying a retail business that happens to need a permit. You're buying a genuinely scarce, transferable asset, one that a well-run store operates on top of, and one that can be worth more on its own than the inventory and fixtures combined. On top of that asset, category-level margins are healthy for a retail business. Beer commonly runs 20 to 45%, wine 30 to 70%, and spirits 35 to 65%, with premium and craft options at the top of each range. The real money in liquor stores. In an open market, this is a straightforward, decent margin retail business. In a scarce, quota-capped market, it's that same retail business sitting on top of an appreciating asset that most first-time buyers never think to value separately. And that's exactly the asset a smart operator eventually gets paid for twice. Real acquisition data backs up just how much the license itself drives the numbers. Independent liquor stores under $2 million in revenue commonly trade at 2.5 to 4 times sellers' discretionary earnings, plus inventory valued separately at cost, not at whatever the seller listed for. Buyers who skip straight to evaluating the building and the shelves without separately pricing what the license itself is actually worth in that specific county routinely overpay or underpay by a meaningful margin because they priced a retail business and forgot they were also pricing a scarce permit. That Florida renewal versus acquisition gap says it plainly. $1,820 a year to keep a license alive, against a price tag that can run into 6 figures to acquire one in the first place. That is not a rounding error. That's the entire hidden asset this business is quietly built on top of, in any market where the license is genuinely scarce. So let's run the 2 real outcomes. The optimistic case. You're either in an open license market with straightforward economics, or you've correctly priced a scarce license as its own asset in a quota market, secured financing that accounts for a realistic approval timeline, and built pre-revenue runway into your plan instead of assuming a fast approval. You hold healthy category margins, Manage inventory as carefully as the license itself, and the license, if you're in a scarce market, sits on the balance sheet as a real, appreciating asset alongside the store's operating profit. The realistic case. You budget for the license fee on the application form and nothing else. Assume a 60-day approval because that's what you read online, and don't build in overhead for the wait. A protest gets filed, or your specific county is simply backed up. 6 months become 9. Every month of that delay is rent, insurance, and staff you've already committed to, with zero revenue coming in to offset any of it. By the time the doors open, a meaningful piece of your working capital is already gone, spent entirely on waiting. Same business, same category, same shelves. The entire gap between those two outcomes comes down to whether the license was priced and planned for as its own asset in its own timeline, or treated as a line item afterthought. So is it worth it? If you're picturing one universal price tag and one universal process, that version doesn't exist. This may be the single most location-dependent business on this entire channel. What's true is that the underlying demand really is durable, and the margins really are healthy, in an open market and a scarce one alike. For someone willing to research their specific state and county's actual system before signing anything, and to treat a scarce license as the real asset it is, rather than a paperwork formality, this can be one of the more durable retail businesses on this channel. For someone assuming the same numbers apply everywhere, the county line you didn't check is the one that decides whether this works. Last reminder, alcohol licensing rules, costs, and processing timelines vary enormously by state and county, and can change. This is not legal or business advice. If you're evaluating a specific license or location, that due diligence, with a local licensing attorney if needed, is entirely yours to do. Remember this: the shelves and the inventory are the easy part. The license is the business. In a scarce market, whoever understood that first is the one who ends up owning the asset everyone else only realizes they needed after they've already signed the lease.